Good afternoon and welcome everyone. For those of you just joining us today, we're here to discuss the basics of one of our favorite topics, down payment assistance programs. We're going to be talking about what they have in common, how they're different, and what you need to know to start conversations about down payment assistance without having to be a program expert. My name's Will Medina, part of our DPR team. We also have with us today Melinda Harris, our wonderful Director of Marketing and Communication, and Lori Johnson, our great customer success specialist. They will be answering questions in the background, so we ask that you use the Zoom Q&A feature to engage with them as we move along. But we will also be checking the chat. And a quick note, today's recording of the webinar will be shared with everyone. So we always like to start with a quick bio. Down Payment Resource was launched in 2008 to solve a problem that drove a lot of people in real estate and mortgage lending crazy. There was no easy way to find and track homebuyer programs. So DPR developed an easier way to connect eligible borrowers with hard to find resources like DPAs, grants, mortgage credit certificates, and other forms of homebuyer assistance. We also provide tools and down payment assistance program information for real estate agents, loan officers, and ultimately consumers to help all of you find and understand the down payment solutions out there for your buyers. Ultimately, we are here to help you connect home buyers to the down payment help they need. So today, we'll be discussing, as mentioned, the basics of loans, grants, tax credits, and other programs that can help eligible buyers achieve the down payment faster, cover closing costs, and get them into a home sooner than they would have otherwise been able to. So let's take a look at the current state of homebuyer programs. Of all the homebuyer programs out there, 74% are some sort of down payment or closing cost assistance. Now, that's really a catch-all category. We'll dig deeper in a few minutes, but it's important to know that not all DPAs are the same. As an example, 80% have deferred payments, meaning you don't have a monthly payment on the DPA loan for a set period of time. 53% are considered forgivable, either partially or fully, essentially becoming a grant over a period of time. And 51% are both deferred and forgivable. Now, not to mention that there are still other down payment assistance programs that are considered true grants at closing or are repayable monthly after closing. We'll explore each program type in more detail, as well as the affordable first mortgages and tax credits or mortgage credit certificates in a moment. So these programs are virtually everywhere. Some markets have more homebuyer programs than others, but there's a state housing finance agency in every state, and their programs are available statewide. So there's literally no county or market in the country where there isn't at least some kind of DPA or other homebuyer assistance. So who offers these programs? Well, as I mentioned, every state has at least one housing finance agency. There are city and county governments that often have community or economic development departments or housing authorities. There's a number of nonprofits like NeighborWorks and Neighborhood Housing Services and others that operate in markets across the country with varying programs. We also have many employers like municipal governments, hospitals, universities that also offer their employees some form of down payment assistance. And let's not forget that there are community action agencies, community land trusts, and so many other organizations out there that are all trying to open new doors to homeownership and promote housing growth and responsibility in their market, which is your market. And they've all got funded and available down payment assistance programs. So we also like to take stock of current trends that we're seeing. Demand remains through the roof. Providers are continuing to make adjustments, in many cases, increasing the assistance amounts available to homebuyers. There are changes to income limits, purchase price limits, all of this, right, to help more buyers in today's market. And as we'll show you in a few seconds, there are new state and local programs that continue to launch in markets across the country. And 81% of all DPAs are funded and available. Now, there's so much more attention on affordability and down payment assistance than in many years. So it is important to note that these programs are available and are not going away. In fact, as I just mentioned, our recent Q1 2025 Homeownership Program Index report, which we also refer to as the HPI report, recently showed a continued rise in the number of available and funded homebuyer assistance programs. Specifically, 43 programs were added last quarter for a total of over 2,500, which at this point is the highest number of programs DPR has recorded. And as mentioned, more programs are coming to markets all over the country with the goal of offering you more opportunities to help new buyers. Within the same report, we also reported on growth in homebuyer assistance programs that expanded inventory options for homebuyers, which included support for manufactured housing and 2 to 4 unit properties. The caveat being that, that 2 to 4 unit property is owner occupied. And just since the last quarter, there has been a 3% increase in programs that support multifamily purchases and a 6% increase in programs that allow for manufactured housing. We also reported on programs that support first-generation home buyers. We saw a 16% increase from last quarter. Now that we've taken a look at trends, kind of a broad overview of the different types, let's get into what these programs share, right? Some basic universal requirements. An example is they are only for owner-occupant buyers. These are not for vacation homes or investment properties, although in some markets, the assistance may be available to buyers of 2 to 4 unit properties as long as they will occupy one of the units. The programs all still require some minimal investment from the buyer to keep a little skin in the game. Now, the investment can take the form of a monetary investment, which we've seen can range from 500 to 1,000, perhaps more. The buyers are also investing time. Let's not forget that. For example, by completing their home buyer education requirement, which buyers typically complete a home buyer education course to qualify for a home buyer assistance program. And of course, these are not cash buyers. We are talking about buyers financing their home with a mortgage. So they have to qualify for a mortgage as well. Now, with those universal requirements in mind, I'd like to take a look at the 3 most common types of homebuyer programs and what's unique about each of them. Now, the 3 most common types of homebuyer assistance programs are the down payment assistance program, the affordable first mortgage, and mortgage credit certificates. There are variations and certainly many other names for each type of program, and that's what we'll clarify as we learn how each one works. And it's important to remember that as we go, no 2 programs are exactly the same, but we're going to learn the basics of each type so you can understand at a glance what your options are. So first, let's review down payment assistance programs. Down payment assistance programs are by far the most common type of homebuyer assistance in most cities. Every state has a housing finance agency, which is the housing division of their state government, and just about all of them have some form of a down payment assistance program, as well as local government and nonprofit program providers who themselves offer DPAs as well. These programs are typically grants or silent seconds that offer down payment assistance of several thousand to tens of thousands of dollars to eligible buyers for down payment help. So off to your right, let's begin with a rundown of grant programs. Those are gifts that do not have to be repaid. Repayable seconds, funds provided at closing that may or may not accrue interest, and the loan could range from 5 to 30 years with varying repayment terms. And we have deferred or silent second programs, where repayment of the original amount is postponed until one of several events occurs, commonly when the borrower sells, refinances, or there's a change in occupancy. And lastly, we have forgivable seconds, where some or all of the original down payment assistance is forgiven. Often, a percentage of the loan is forgiven each year for a predefined number of years. So, just as an example, it's common for a forgivable DPA to be forgiven 20% per year over 5 years. And often, down payment assistance programs also allow the funds to be used for closing costs, prepaid expenses, rehab, or repairs, which can be particularly important to enhance the property or accommodate livability standards for disabled buyers, and even loan principal reductions. All of these uses help the buyer shed the costs of purchasing and financing a new home. We're even seeing more programs allow their funds to be used for temporary or permanent interest rate buydowns. Now, one of the most common misconceptions about down payment programs is that buyers must be first-time home buyers. In fact, there are over 2,500 programs across the country maintained in down payment resource, and 40% of them have no first-time home buyer requirement. Beyond that, most programs adhere to HUD's definition of a first-time homebuyer, which effectively states that you're a first-time homebuyer if you haven't owned a home in the last 3 years, with still more exceptions to that rule for widows, divorcees, displaced homemakers, and other circumstances. But in just about every market across the country, we see programs that waive the first-time homebuyer requirement in, say, targeted areas. They make exceptions for veterans or certain professions, or may not have the requirement at all. Now, while down payment assistance comes in many forms, they all help the buyer reduce the down payment burden, open new doors to homeownership, and pocket a little extra cash upfront and along the way for other homeownership obligations. Many of these programs are grants, meaning they are interest-free, payment-free gifts to buyers who meet the eligibility requirements. Of course, others may bear interest, but may defer the payments for the life of the loan until sale, or even better, until the affordability period expires. So, as an example, many programs stipulate that the buyer occupy the property for a certain number of years that could range between, let's say, 3 and 10 years. And then the lien is forgiven, essentially becoming a grant. And for those programs that are not grants, many will take second or third lien position to allow for layering of additional assistance programs. So, what are some of the eligibility requirements? We've gone through some of the common threads between them. Well, most programs have the following limits. Eligibility depends on the program and the funding sources. Very key. Income and purchase price limits are always market adjusted, often based on calculations for the area median income, AMI, but basically they all have income limits ranging from 80% all the way up to 140% of AMI, and sometimes even higher, which can creep into six-figure incomes in many cities. They typically have sales price limits too, but those are usually in line with HUD's loan limits in each market, offering assistance at or beyond median home price values. Now, the location of the property is critical, as each program, especially at the city or county level, offers assistance within specific boundaries, such as city or county limits. But remember that the programs from your state housing finance agency offer assistance statewide, which covers your entire market. And it's important to note that we even have some nationally available programs integrated into down payment resource. Some programs have more needs-based eligibility criteria that involve an evaluation of each buyer's scenario and assistance needs by the program administrator. Most programs will mirror first mortgage requirements, as an example, requiring a minimum FICO score of 620 or higher. Homeownership history also makes a big difference. Many programs, it is true, are only for first-time homebuyers, but there are many for repeat buyers or even current owners. And remember, a first-time homebuyer is simply someone who hasn't owned in the last 3 years. Now, I'll expand on eligibility as it pertains to military service and certain professions in a few moments, but both can open new doors to assistance that may not be available to the general public. Ultimately, these programs reduce the buying costs for a buyer, expedite their timeline by offering down payment or closing cost help that enables a buyer to reduce their out-of-pocket expenses and retain their liquid savings. As an example, let's think of someone obtaining FHA financing. They're required to put at a minimum 3.5% down. If a DPA program helps them bring more to the table and instead qualify for a conventional loan at 5% down, this effectively lowers the monthly payments and the long-term financing cost. Specifically, an FHA mortgage has expensive upfront mortgage insurance premiums and higher monthly mortgage insurance costs that last the life of the loan, whereas conventional mortgages have no upfront mortgage insurance premium and lower monthly insurance premiums that can be canceled once the buyer gets to 80% loan to value. So when you reduce loan to value, you also lower debt to income ratios, which help more buyers qualify and increase their homeownership possibilities. Most importantly, it increases the purchasing power of a buyer's income, allowing them to more readily qualify for the home they like, and in some cases, qualify for a little extra home to suit their family needs. Of course, reducing monthly payments also allows for a little extra cash every month to be put right back into savings, which has been shown to improve default rates. Many down payment assistance programs also require the buyer complete a home buyer education course, which provides valuable information about the home buying process and the resulting responsibilities of homeownership down the road. This better prepares potential buyers for the obligations they face as owners and the steps they'll have to take to get there, ultimately enabling them to be better clients and more adept decision makers for you along the way. More and more down payment providers are offering online education options for their home buyers. Course material is typically in line with HUD certified homebuyer education, meaning most courses are simply an 8-hour class that can be completed on a Saturday or during a few evenings of online sessions at the consumer's discretion. This allows buyers to work ahead towards down payment assistance pre-approval and hit the market as more competitive and informed shoppers. And most importantly, these buyers are far more likely, according to HUD and the Harvard Joint Center for Housing Studies, to be successful owners down the road. Default rates are significantly lower when homebuyer education is completed before closing. Now I'd like to look at another of the most common homebuyer programs, the Affordable First Mortgage. Affordable first mortgages are additional mortgage options typically only available through a state or local housing finance agency. The most common benefits you'll see are below market interest rates, reduced mortgage insurance costs, and allowances for higher loan to value. For example, Fannie Mae's HFA Preferred and Freddie Mac's HFA Advantage offer reduced mortgage insurance below a standard conventional product, all with a higher loan to value. You can typically combine these affordable first mortgage products with down payment assistance and or tax credits from those same housing finance agencies. Affordable first mortgages help further reduce the cost of homeownership for new buyers. Lowering monthly payments through lower rates or mortgage insurance pricing helps increase the purchasing power of each buyer and can potentially expedite homeownership for them, getting them into a home sooner than they would have otherwise been able to. Now let's take a look at the third of the most common homebuyer programs, the mortgage credit certificate. The mortgage credit certificate, or MCC as it's also referred to, is available from state and local housing finance agencies in some states. Not every state offers an MCC, but if there's one in your market, we ask that you take a look. They're a great benefit for home buyers. This offers a federal income tax credit of up to $2,000 per year. Eligible buyers must get an MCC prior to closing and then get to use it every year for the life of their mortgage. The tax credit helps offset part of the mortgage insurance costs, and the borrower still gets to deduct the rest of the mortgage interest paid each year. MCCs help reduce a buyer's federal income tax liability by offering a credit for mortgage interest paid. Some MCC providers will allow a lender to take the MCC credit amount and annualize that over a year to increase a buyer's qualifying income. And some MCC providers will also reissue an MCC through a future refinance. So let's take a look at an example of how MCCs work. Let's take a $200,000 home. The buyer closes and makes 12 payments in the year. They've paid 4% interest, so $8,000 in interest in that year. The MCC allows you to claim 25% of the mortgage interest paid as a tax credit. So in this example, $2,000. But the homeowner still gets to claim the rest of the $6,000 of mortgage interest paid as a tax deduction every year. And here we have a recent case study in collaboration with Loan Depot. It details the success of originator Mosaic Gatling, their success engaging partners to explore affordable mortgage solutions for homebuyers. Within the visual, it's regarding layering two Nevada Rural Housing Authority programs, a down payment assistance program, and an MCC, of course, if conditions permit. The example depicts the potential savings when exploring affordable first mortgage solutions for your home buyers. So let's wrap up this breakdown of the most common homebuyer programs with a few other scenarios where there may be additional or even unique benefits for your clients. There are many programs that offer additional or unique incentives to buyers purchasing in targeted areas, which are areas with higher foreclosure rates, vacancy rates, unemployment rates, or parts of town most in need of community investment. Typically, there will be no first-time homebuyer requirement. The assistance amount is increased, and the income limits and sales price limits are often higher. The idea is to promote homeownership in revitalization areas, particularly so that core service providers and professionals can live where they work. These targeted areas are all over the map, not just in big cities. Targeted areas are usually bounded by specific cities, zip codes, or census tracts, and sometimes entire counties. There are also special programs available in many markets that target certain professions. We're talking about typically teachers and educators, police officers, firefighters, healthcare workers, and municipal employees. As an example, in Georgia, the state funds the Georgia Dream program that offers $10,000 in down payment assistance to eligible buyers. But teachers, police officers, and nurses can get an additional $2,500 for a total of $12,500 in down payment assistance and closing cost assistance. The idea behind these programs is to enable homeownership among local core service providers, and many of these programs have very broad definitions of terms like educator to include not just classroom teachers, but public school system employees at large, like paraprofessionals, librarians, school nurses, or protectors could include police officers, sheriff's deputies, corrections, and probation officers, and more. Another targeted audience of eligible buyers is our armed forces active duty personnel and veterans. There are so many programs out there that waive the first-time home buyer requirement for veterans, and some offer higher assistance amounts as well. Many of these programs can be used in conjunction with VA loans and ultimately offer our veterans a little more flexibility to become buyers despite homeownership history. Some of these programs offer the same or similar incentives to active military and Guard or reserves members. Now, we've given you a lot of information today, but we want you to know how to access all of these DPA programs once we leave this webinar. So I'll be showing you a number of ways you can access DPA info and start to enhance your marketing. Anyone can go to downpaymentresource.com and do an eligibility search for free anywhere in the country to see what's out there for you or your client. If you're an MLS partner with Down Payment Resource, we identify eligible listings in your MLS and match them to all available home buyer assistance programs. And we provide these matching tools in your MLS agent and client portal listing reports. You also get Down Payment Connect for free through these MLS partners. So we ask that you check out DPR, let your clients know what's available, and talk to your lending partners about which programs they may offer. And of course, let us know if you have any questions along the way. We are continuing to onboard MLSs, and several more will be launching DPR in the coming weeks. Now, if you're a member of one of the partner MLS, when you are logged into your MLS, look for our down payment resource button on eligible listings. You'll see these down payment buttons on agent reports as well as in your client portals. So click it, and we will tell you or your client which programs are available for properties they like the most. Now, Down Payment Connect is free for members of our MLS partners. If you're an agent and not a member of one of those MLSs, you can subscribe to Down Payment Connect for your own DPA search page and lead gen tools. And loan officers, we have a version for you as well, which allows you to control which programs consumers see so that you are better aligned with the product offerings within your company. So you might be asking, what is Down Payment Connect? Down Payment Connect allows buyers to complete a program search from your personalized link. This provides you with the opportunity to generate leads by engaging and educating new buyers about the down payment assistance programs in your market. You can use your Down Payment Connect link on your website, in your email marketing, and across social media. And just to be clear, you are not purchasing leads with Down Payment Connect. You are taking advantage of our unique DPA eligibility platform to generate your own leads. And nobody else gets your leads, just you. So we certainly encourage you to get creative and reach more buyers and educate them on these amazing opportunities. We'd also love for you to join our growing Facebook group, Down Payment Insiders. There, you can join over 13,000 real estate agents, loan officers, housing counselors, and even DPA providers as they discuss their best practices with homebuyer assistance programs, first-time home buyers, working with lenders, learning from each other, marketing ideas, so much more. So you can listen in and learn or participate in the dialogue and engage with your peers. We've also seen that it's a great place to network and connect with loan officers that offer DPAs in your market. Now, I'll leave you with a case study that illustrates how important DPA info is for realtors and for home buyers. Amber here was a new agent in Florida. No one was helping her peers understand down payment requirements as many of them began to explore the idea of homeownership. So she stepped in learned all about DPA programs, which helped build her business serving those same buyers. Like Amber's clients, DPA customers become customers for life. So tell their story, help them, and they will refer their family members and their friends. In closing, feel free to reach out to us with any questions. We are here to help you and your clients find the assistance they need. We can be reached at info@downpaymentresource.com. And if there are any additional questions, we will be sticking around for a few extra minutes and answer some Q&A. Um, so with that, thank you again. Okay, so I see a question here. I'll answer it live. Will we have access to the Q&A chat when you send the recording? I do not believe you will, but as mentioned, if there was something maybe that was not answered, feel free to reach out to us at our inbox. Mel, anything to add there? Sorry for taking that one.
Oh, no. That's fine, Will. Yeah, no, we Zoom doesn't do a very good job of capturing the chat, and I apologize for that. Hopefully, they will enhance that feature down the road, but we don't include that. But like Will said, please feel free to reach out to us at the email address on the screen, and we're happy to answer any questions that you have. In the follow-up that you'll receive from today's session, it will include the recording, the slides, and then I also put some other helpful information in there. The homeownership program index report that Will mentioned earlier in the session, I'll put a link to that. I'll put some more information about our site, how you can search for programs. I know a few people have asked about Down Payment Connect. I'll provide some information in there as well. And of course, our contact info if you guys have any questions.
Thank you, Mel. Okay, yes, Q&A is active. This is great. Um, have credit score requirements been revised in light of the changes for student loan repayments? Thank you for submitting your question. Um, I am not 100% sure. What I can tell you is, as we're connecting with program providers, they are obviously keeping an eye on the changes that the administration is making and making adjustments as appropriate to their own guidelines. And so if there are any changes with respect to a borrower qualifying for a specific program, we will capture that information and certainly share it. So thank you for that question. Do we have an assigned representative for more detailed info regarding DPA? If you're still on, would you mind that, are you referring to being a part of our, like of a partner MLS to see if there's a contact there? Is that what you're referring to? Can we expect to see more classes like this? Yes, we actually have them once a quarter. Different topics, of course. And I know as a member of a partner MLS, we also do trainings as well there.
Will, I'll just add too. I will
Oh
put
yeah, please.
we have this webinar. We have 4 webinars that we actually, I'm sorry, 3 webinars. 3 webinars that we conduct once a month on kind of a rotation. And I will post in the chat the link to our education page. We keep that updated and you can register for any upcoming sessions there. I will also include that information in the webinar follow-up that you guys get as well.
Thank you, Mel. Okay, I see here someone is requesting a partner contact for FMLS. Is there a way to, oh, thank you. I see there's just captured their information. Thank you. Thank you for reaching out to us about that.
Will, really quick, John in chat
Mhm.
asked a question. Can buyers attend workshops prior to committing to a mortgage? And I just wanted to say that, yes, they can. And I think that homebuyer education, I'm personally a big advocate. Most programs, especially for first-time buyers, will require homebuyer education, and they can certainly do that prior to doing anything else. And I would actually recommend it. So that's a great question, John. I just thought it was worth bringing to the front of the class, if you will.
Well said, Mel. Well said. Let's see here. Will real estate agents have the same resource to look up eligible down payments that loan officers use? Yes, if you are with a partner MLS, uh, might be a difference in how the tools are applied. But of course, if you're not, um, I'm wondering if we can put in a link to Down Payment Connect in the chat, Mel. But in general, as mentioned, anyone can run a search using our search eligibility tool at downpaymentresource.com. So that's certainly if you're not a member of a partner organization, don't let that stop you, certainly. Is the index report available for download? I'm on the website, but I do not see a PDF format. I'm I don't believe it is. Mel, it's not correct.
No. I see that question too, Will, Ava. Ava, it's not in like a PDF downloadable format. We do have an infographic that's a PDF. We have a state by state kind of a program breakdown that's available, but no, currently there is no PDF format for download. Um, but if you need anything specific from the reporter, if you have questions, don't hesitate to reach out to us.
Okay, at the top. I've looked into using this down payment assistance resource in the past, but have ran into challenges finding a lender who actually participated in or serviced the programs I was interested in. Okay, yes, we hear that often. Do you happen to have a list of recommended lenders who work with these programs or any guidance on how to better navigate that process? Well, if, as mentioned, running a search on our using our search eligibility tool, uh, part of the information that we provide you is whether or not a participating lender is required to qualify for that program. So that'll be available there. Um, I know our Facebook group, the typical post always has to do with, hey, I'm a lender in this area or I'm a realtor in this area. Is there anyone that I can potentially connect with? And I certainly apologize if you hear leaf blowing in the background. Um, so those are two ways of finding a list of lenders. We don't specifically recommend any lenders ourselves. It's usually information provided and associated with the home buyer program. Um, if there's any other team member that has anything to add, feel free. But that is a great question. Always asking for recommended lenders. Wonderful question.
Hey, Will, I got one more to add.
Yeah.
We got a question in chat from Ruth, and um, I know that a couple of people have asked about how to access our tools and resources if you are a member or subscriber to one of our partner MLSs. And just a really important note there, if you are a member or subscriber to one of our partner MLSs and you're trying to access our tools, make sure that you're logged into your MLS. Otherwise, if you click on the link, it's probably going to ask you for a username and password, thinking you are a Down Payment Connect subscriber. So just make sure you're logged into your MLS and access our dashboard through your MLS. So when you're logged into your MLS, it should be somewhere on your MLS dashboard. You should see a link to Down Payment Resource and make sure to access us there. And then that way you won't have any kind of login credentials needed.
Thank you, Mel. So I again wanted to thank everyone for joining us today. Our inbox, info at downpaymentresource.com is, no pun intended, a great resource. If there were any questions that maybe were not answered today or just anything that might pop up afterwards. We certainly always appreciate all of the feedback. It takes a team effort, and we enjoy bringing these webinars to you. So we also ask that you look at the education page on our website to stay up to date. Sign up if you know someone that maybe has never joined. Feel free, send them that link, or if you feel like you need a refresher, these webinars are constantly changing. Um, so with that said, I again wanted to thank everyone for joining us today, and we look forward to seeing you in a future webinar. Thank you.